All right, hey guys, good afternoon. Today is Monday, August 22nd. It is 2:30 right now. Our scheduled time to go live is 2:30. So I'm just gonna finish setting up this room real quick, and then we will get started with this mentoring session for this week. So if you guys have any questions, feel free to put them in the chat. Otherwise, just let me go ahead and set this up, then I'll send out the link for you guys here in the premium. So there. That's good. Couple more things here to update. And I think we're good to go. So let me get this link sent out. You guys here in the premium. There we go. Cool. All right, so I'll give it a few minutes for people to join in. Just a reminder, we started about 30 minutes later than usual today, guys, because some of the members requested to have it at a later time. So hopefully that wasn't an inconvenience to you guys, but looks like only a few people are in the room right now. So we'll give it a few minutes for people to make their way in, and then we can get started shortly. So well, let's see what we got over here. Looks like some people took some pretty solid trades today. I didn't take any trades myself, but looking at everyone else, they did pretty good overall. Trish did good. Scott did good. Mills on, Seth, Charles, David, Scotty. There's a handful of people here who did pretty solid. He's off. All right, cool. So let's see. It's 2:33 right now. So good afternoon, everybody. Just a reminder, today is Monday, August 22nd. Our scheduled mentoring session for today was scheduled for 2:30. It's about 3 minutes in. So people are still trickling their way in. If you guys have any questions and you guys want anything that you want me to cover today, go ahead and put your questions in the chat, and then we can cover whatever you guys want us to review. I don't have any questions lined up for the session, so this session will go on for as long as we have questions. So whatever questions you guys have, don't feel afraid to ask. If you guys are starting to familiarize yourself with the new SR strategy, I can go over that. That's probably going to be our main thing to cover today anyways, because that's all that we're trading during the live sessions. But as more people make their way into the room, I will go more in detail about how everything is applied. But I mean, it's a pretty simple strategy. It's not too difficult. But the main reason we're applying that for now is because of the current market conditions. As most of you know, the summer market conditions are very rangy and it consolidates a lot. So this type of strategy lets us trade within the range and within consolidation phases. iPhone's asking, so iPhone, who are you exactly? I just want to make sure. I don't mind that your name's iPhone. I just want to make sure I know who I'm addressing. Because iPhone's asking, okay, what's a pip? Pip means points in percentage. So I don't know if that was like a real question or if you're kind of just asking something really basic. But pip stands for points in percentage. So I'm not sure if you're like really not familiar with what a pip is, or if you're just asking the question. If you really want to know, I mean, I can explain it too. I can't tell if you're being serious or not, because that's like, you know, one of the most basic things. Okay, gotcha. Yeah. No, iPhone said I'm just joking, bro. Okay. Yeah, I figured you were joking, so I was like, I'm pretty sure you should know what a pip is. But yeah, for a lot of you guys who don't know what a pip is, it just means points and percentage. So like we trade with points. If you're doing pips, that's why typically, you know, we go for like 100 pips, or 10 pips is like equal to like 1 point, right? So it's just a percentage within the point. So it's not necessarily something that anybody needs to know, but that's just the explanation if you guys are confused or, you know, just curious to know what a pip stands for. Anyways, see if there's anything else here. Professor's asking, can you go over the new strategy? Didn't get a chance to watch the previous videos. Yeah, sure, professor. So if there's any other questions, guys, feel free to put them in the chat. There's only about 6 people here right now. I'm sure people will start joining as the session continues along, but you know, this session will continue for as long as we have questions. So if there's anything that you guys want me to delve deeper into as we're covering the new strategy, just let me know, and I'll try to go over, like, you know, the different types of examples so that you guys can be more familiar with it as we continue along, because this is I mean, it's a pretty solid strategy during the summer. It works all throughout the seasons, but it's especially good during the summer, which is perfect for us because that's what you guys are looking for, right? So let me just go back over here and see if I can find any examples around this area. Okay, so there's okay. So I'm just going to draw this right here. You guys don't have to draw your zones like this, but this just makes things easier because, as you guys can tell, the SRs are a bit confusing. So let's just start from the beginning. So I'm going to go and just rewind to, let's say there's an entry right here. So I'm going to go and just replay it to this point. Okay. And just a reminder, I only apply this strategy from like 6:30 to 8. I mean, my trading schedule hasn't changed at all. It's still the same. I only really trade it during the live session. I call it a day. You guys can apply this throughout the day, but just keep in mind that it becomes a lot riskier as you trade it and the day progresses. So let me put the requirements up here for this specific strategy. This is called the K2 1 minute SR rejection strategy. So here are the requirements for looking for buys and requirements for sell. So since we have a sell entry right here, we're just going to look at the sell requirements. I'll look at some buy examples as well as we get to that point. But right now, for this specific example right here, I'll just show you a sell. For the first requirement, you want to identify a top wick rejection off the K2 SR version 2 zone with a moderate red candle. So as you guys can see right here, let me just turn some things off here that we're not necessarily using. We're not using the high lows. We're only using the K2SR version 2 indicator, the trend meter below, and the momentum indicator. So those are the 3 indicators that are on right now, and also the pivots indicator, K2 pivot. So 4 indicators: K2 trend meter, K2 momentum, K2 pivots, and K2 SR version 2. So with that said, we have everything on the chart, right? You have all the indicators on the chart. You want to identify a top wick rejection off the K2SR version 2 zone. And you want to make sure that it's a moderate red candle. So with that said, this candle right here is rejecting off this zone, right? What I typically do is I will draw my zone over the zone, and you can just hide it. I mean, it's going to make things a lot easier. It's going to clean it up so that you can have a better idea where that rejection's at. You don't have to do this, but I just do this for visualization purposes so that you guys can focus on the specific candle. So we have the top rejection right here. This is a moderate candle, and by moderate, I mean that it's not a weak candle. It's not like a doji. It's not a reversal candle. It's a moderate candle. So in order to identify that, you basically want to make sure that the bottom wick is not long and the body is not too small, right? Because if it's too small, it identifies sometimes as a weak candle. And if the wick is too big on the bottom, it looks like it could be a weak candle or it could be reversing. So with that said, this is considered a strong candle, but we're looking for moderate. So it could be moderate to strong. It doesn't necessarily have to be very strong. Like this is a perfect entry right here, but they don't always come up like this. So with that said, we have requirement 1 met. We have a top wick rejection off the K2SR zone with a moderate red candle. For number 2, you want to confirm your trading in the direction of trend using the K2 trend meter and the K2 pivots. So looking down here at the trend meter, it's currently red. So this indicates that price is in a downtrend. Also, you can see here from the K2 pivots, if you guys are not familiar with these are typically 4 lines. I only use pivots 3 and 4. This color is normally orange, but I've changed it to green so that it's easier to see which direction trend's going, right? When the red pivot is over the green pivot, this indicates that price is in a downtrend. Vice versa, when the pivot is green over red, this indicates that price is in an uptrend. So with that said, right here, the trend meter is red. The pivots here are angling down. They don't need to be angling down, but you just want to make sure that the pivot 4 is over pivot 3, which is the red candle or red pivot. So with that said, the second requirement here is met because we're looking for a sell. We're trading the direction of trend, which is a strong sell. Move on to the third requirement, confirm you're trading in the direction of momentum. So with that said, we look back to the most recent momentum signal, which is red right here. And with all of those requirements met, you can enter this for a sell position. So with that said, you'll enter a short position right here. TP stop loss is set to 100, 300. Once you have that set up right there, you pretty much just let it run. Move on to the next candle right here. It's in profit, pushes down further, and full TP. So if you look back to here, there's actually a couple more entries. So it looks like, so this is a perfect entry, the one that we marked up. It looks like there might be another one right here. Actually, no, there's no entry right there. Actually, I take that back. That was the only entry. There was no wick rejection. There's a wick touching it, but it's not necessarily rejecting off the structure. It's just touching it. So you just want to make sure that it's really clear. Like this right here is a clear rejection off the SR because you can see the wick is kind of pushing away from it and price is pushing downwards. So, or for this candle here, sorry. And I think that's pretty much it. If there's any other questions you have regarding this, Professor, go ahead and type them in the chat right now. So I can clear that up. Otherwise, I'll show you another example for a buy. It's the same thing. It's just in the opposite direction. So if there's anything specific about this example, just let me know right now, guys, before I move on. Otherwise, we'll move on to the next example. Okay, perfect. Professor said it was clear. So awesome. And as you can see, it's super easy. And the things that you want to keep in mind is to avoid red flags, right? So I'm sure you're still familiar with that, Professor. Red flags are just sessions, opening price, news price, candles too large, or prices ranging. This isn't necessarily like a big red flag because you can trade the strategy when price is ranging, but obviously you don't want to be trading when price is like literally going nowhere. So yeah, no problem, Matt. Glad that that cleared things up for you guys right there. Let me look for an example for a buy. So I'm just going to go back, see if I can find anything over here. So it's going to replay this back here. Turn on the K2 SRs. Let's see. So I do not see anything there. Let me go a little further back. This was Sunday, so obviously the market was kind of slow. Nothing there. Nothing there. Yeah, we just got back from the weekend, so the volatility here wasn't really pushing as much. Okay, here's an example right here. So I will show you I'll show you two examples because it looks like there's a couple back-to-back entries right here, right? There's actually another one right here. Okay, this is actually a better example. So again, guys, if you guys are not familiar with like how to identify these zones here, when the zones overlap, and I wanted to use this example here to show you guys. So like basically when the zones overlap, like for example, we have this red zone and it overlaps with this green one, right? So sometimes you're wondering like, what do I do? Do I just draw two zones? It's easier to just draw one. So instead of drawing two different zones, I mean, you could draw two zones if you really wanted to. You guys can go ahead and do that. It'll look like that, kind of messy. But for me personally, I just engulf it. So like basically, or I just draw one big zone. So instead of having to draw, these two zones, I'll just stretch this out a little bit to cover this zone right here, right? It's a zone within a zone. So when you have something like that, you can just delete this smaller one and then you have your zone right there. So I'm going to go and just turn that off because we already have it marked up. This is going to be the entry right here. Actually, this is not a good entry. Sorry. Let me just look for another one or here's an example of what we would consider valid entry, but risky. So this is actually a good example to show you that you can take trades when they're not all aligned. Obviously, you want to take them when they're all aligned because it's easier to spot, and odds of it hitting are very likely. But I'm going to show you a riskier entry right here, or considered risky, I guess, so that you guys can understand that you don't have to, like, you can go in between the lines sometimes. So with that said, first requirement, identify, since we're looking for a buy right here, you want to identify a bottom wick rejection off the K2SR zone. The bottom wick rejection is right there with a moderate green candle. This is a moderate green candle. It's actually a strong candle, so it's better. Second, you want to confirm you're trading in the direction of the trend. As I mentioned earlier, this isn't necessarily a good entry. Like, I wouldn't consider it good because the trend meter here is green, indicating that we're in an uptrend. However, the pivots over here, they're not necessarily confirmed yet. You can see the red pivot is still over the green one. However, the thing with this is that price, or the pivots, are starting to shift to the upside, right? So you can see it was coming down, came up, came back down, and now it's swinging right back up. So you can kind of anticipate that the price is reversing, right? It was dropping for quite a bit, and then now it's swinging right back up. So with that said, if you wanted to take something risky, you could probably take this. I wouldn't have taken this if this was on the live because I don't like taking risky trades with you guys. I want to make sure that you guys develop good habits when identifying these entries. Obviously, once you guys become more skilled and you guys are able to identify this on your own, you guys can take whatever entries you guys feel comfortable with. But I just want to show you this example so that you guys can see that this strategy still works, even if it's a risky entry. It's just, you have to understand the risk. If you lose the trade, you can't get mad about it because you knew that it was going to be risky. So with that said, confirm you're trading the direction of the trend. The trend meter here is green, and you can see that the pivots are starting to shift. They're not confirmed bullish yet, but you can see that it's starting to shift to the upside. So with that said, we've confirmed requirement 1, requirement 2, confirm you're trading in the direction of momentum. There is a bullish momentum signal right here, previously to the entry candle right here. And with that said, you'll enter a buy. So you'll enter a long position right there. Same thing, 300 or 100 TP, 300 stop loss. With everything lined up right there, we'll see how this trade goes. And you can see it kind of bounces around a little bit, but eventually it goes up and hits TP. So you guys can see that it's risky, but it still hits, right? So this is considered a risky entry. Let me find a better one over here. I know there's got to be others around these areas. So let me just continue along. Just replay from, I guess, over here. Okay, so here's a good entry right here. This is what would be considered a safe trade. Right, so let me put the requirements back up again. We're looking for the same exact thing. So again, right here, we're going to identify the SR zone, which would be right here. Turn this off just to clean it up a bit. You You can see the wick rejection right there with a moderate green candle. So first requirement, identify bottom wick rejection off the K2SR zone with a moderate green candle. It's right there. Second requirement, you want to confirm that you're trading in the direction of the trend using the K2 trend meter and K2 pivot. So right here, you can see the trend meter is green. This indicates a strong uptrend. With the addition of the pivots over here, green pivot over red, and it's angling to the upside, that's a strong confirmation of bullish trend. So this applies with our entry here. Requirements 1 and 2 have been met. Third requirement, confirm you're trading in the direction of momentum. We have a buy signal right here. This indicates that momentum is going to the upside. Lastly, you'll enter a long position right here. You have everything lined up. TP stop loss set at its fixed TP stop loss. With that said, you let the trade run. And there you go, full TP. Easy as that, guys. So this trade right here came pre-market at like 6:10. I mean, I've seen some people take these trades. Like if you go on the 9th, like on the 19th, like if I pull up August 19th, and I just look at random people's trades, right? Like John over here. John took some pre-market trades. You can see his buys right there, full TPs. We've got let's see who else is here. Dr. Strange. I keep forgetting who's well, you guys know who Dr. Strange is. I keep forgetting his actual name, but he took pre-market trades right here as well. So full TPs off those. So it's just up to you guys, right? If you guys feel comfortable applying the strategy outside of the live session, you guys are more than welcome, but just understand the risk. So if you take them during the live, odds of you losing are pretty unlikely. But if you take them outside of the live, you know, it's really up to you. So for me personally, I only trade within the live, sometimes outside, like if the day's too slow, or if I see really good entries, I'll take them. But for the most part, if you stick to the live, you should be perfectly fine. So it's the question from Professor. Professor said last week, how many of these did you say you took in the room, and what was the win-loss ratio? So we have the spreadsheet right here. Like, let's see, Maddie provided the spreadsheet for that. So he pretty much broke it down right here. Last week, August week 3. So for the let me just pull up our actual results, because that's kind of what you want to see, right? Like what we actually took on the live. There was one trade here that was my fault. The only loss that we took was my fault because we entered the trade too early and we didn't wait for it to close. But the results from last week were right here. We had 8 wins and 1 loss. So 8 divided by 9, it was an 88% win rate last week. That loss was my fault though. That loss shouldn't have happened. We took it and we didn't wait for the candle to close properly. So let me just go over here real quick. You know, because I try to be like as transparent to you guys. Like I make mistakes too. It's like mistakes are gonna happen. But I did take a screenshot of that trade that we took. Or I thought I did. What day was it? Calendar. That was the 15th. Okay. So the 15th over here. Okay. So here's the entry right here, right? This green candle. That was my mistake because we were just too excited to take the trade. There was an entry right there, but you can see the wick was too big. We shouldn't have taken that entry. I took it anyways. It was my bad because I was just getting FOMO. But we had 2 back-to-back wins after that. So we had one first win, which was great. It was solid entry right here, like little to no wick on top. That was perfect. The second entry here was just it was a totally bad entry, but I still took it and I lost. But we had another win, so the losses were like very minimal. Because we pretty much covered most of the losses off those other 2 trades. So yeah, for last week we had 8 wins and 1 loss. It should have been 8 wins and 0 losses, but mistakes happen. But here's the spreadsheet. If you look in the chat, Maddie's actually put together a spreadsheet. He's been documenting all the trades. So for all of the actual trades, like if you took every single trade, there was about 14 wins and 1 loss last week. Last week was a slow week, so it just played out, properly. The week before that, week 2, or August week 2, there was 8 wins and 0 losses. The week before that, August week 1, this is NFP, so like obviously the market's gonna be all crazy week 1. There was on the live 22 wins and 1 loss. Total trades for the week was 72 wins and 5 losses. So I mean that's still pretty good if you guys think about it. Like, okay, so total trades, there was 77. So 72 divided by 77. If you took like every single trade, it was still a 93 or 94% win rate. With us on the live, it was like 22 divided by 23. Still a 96% win rate. So I mean, it's a pretty like high win rate, and it's pretty good for summer because a lot of people don't do well in the summer because people try to apply the same strategies they apply in the spring, right? Like during the spring, winter, not so much winter, I guess more so like fall, part of winter and spring, the market's very directional. So like when you trade those types of strategies, it's easy because the market's going one direction. In the summer, price goes back and forth so often. So like you kind of have to change and make small adjustments during the summer because there's lower volatility and it's just a ranging market. So we kind of like figured out the trifecta of like what strategies we'll be applying throughout the year. I've been applying the strategy for a while. I just never taught it to you guys because I always thought that it was a little complicated. But now that I've kind of put all the pieces together, I'm able to teach it to you guys with no problem. So this is a good summer strategy. It works all year round, but it's especially good in the summer. During the fall, you can go back to applying any of the other strategies, like the variations, pivot scalp, intraday, whatever you guys want to apply. But during the summer, you just want to stick to these types of strategies where you can trade within a range, because you'll see that price is ranging a lot. I mean, you'll see it's really easy to spot here. Like, so if you're just to back up on the chart, you can see here a range, price pushes up a little bit, another range, price pushes down. It's like constantly in a range, right? Price will drop a little bit, goes into like a forever range right here, pushes up. So it continuously goes into a range. This strategy allows you to trade within these points because you're just catching those little pushes in between the range. And even if price isn't pushing far enough, you can still catch some pretty solid profit because you're only going for like 100 pips. So you're not going for those big 1,000 pip moves. You're going for these small moves where you can pretty much scalp within them because you're only going for this much, right? So you can easily scalp this much within these ranges. So that's the reason why we're only applying this during the live right now. Even the breakout, the breakout's been hitting, but I haven't been taking them because you never know if it'll be a 1,000 pip day or like a 500 pip day. It's just a bit all over the place. So yeah, if there's any other questions regarding that, let me know. Otherwise, we have one more question from Sam over here. Sam said, hey, Sean, can you verify some of Maddie's results on the 3rd and 4th of August? I might be mistaken, but some of them don't follow the requirements. So let me check real quick. So Maddie's on the 3rd and 4th. So is there a specific one that you're referring to, Sam? Because he has the requirements right here for this. Well, he has a strategy that's applied. I'm not sure if you're looking at these right here because he'll say like intraday, scalp, or SR. So the SR is the one that we're applying. Sometimes they'll overlap, like it'll be a strategy within a strategy. So if there's a specific one that you saw, Sam, or if there's a specific time, that would help so that we can see what trend you're referring to. Because he has this right here where it says reversal. I'm not sure if that's what you're referring to, or if it's an SR, then it would have to align with it. So I'll just wait for you to confirm, Sam, and then we can take a look because there's a lot of entries here. So I just want to make sure that we're looking at the right one. But I'll pull up or I'll try to pull up that day. Hopefully that day will come up because the 1 minute chart only goes back so far. Okay, you said all the entries between 10 and 11:45. So a lot of these aren't the SR strategy. Sam, you're talking about the third one. So the third one right here is intraday scalp. That's why the requirements didn't line up for that one. Or let's see, on the third. I guess we can try to pull these up, but there's like a lot of these here that don't align. But let me just pull up that date if I could. Hopefully I can pull it up because sometimes the data doesn't go that far back. So we got August 3rd over here. Okay, 10 o'clock. So let's go back and just replay it to like 11, I believe. Or something like that. We'll figure it out. Okay. So let's go over here real quick and see what we're looking at. So we mentioned scalp SR. Okay, so at 10:43. Okay. So we got one right here. $10.43. So I think for this one right here, this looks like an intraday scalp. Let's see what he put. 10:43. Yeah, I think for okay, Maddie said intraday. Oh, okay, yeah, Maddie said I didn't even know Maddie was here. The 10:43 is an intraday SR scalp. So I think what he meant to put for this was just, I mean, it's mainly an intraday trade. So I think that's what he was referring to right here, because this is an intraday one. It's trend meters green. Momentum signal right there is green as well. So this right here would be an intraday entry that he marked up. And it looks like, yeah, that's the one that he was referring to right there. Let me see the next one. Next one was 10:49. Yeah, I think this one here was also an intraday scalp. It just wasn't an SR. Gosh, yeah, Maddie said 10:21 is a sell entry for SR entry, but it was before we identified. Okay, yeah. So Maddie, so when Maddie put the spreadsheet together, this is before we like we introduced the moderate candle requirement, right? It was just like every rejection. So for the 10:21 over here, this was just one, yeah, the loss that I think that was one, right? Yeah, 10:21. It was an SR entry because Maddie was identifying the rejection off the structure right here, but it wasn't a moderate candle. Also, it was against the trend. So this one didn't really line up with the requirements. This was like in the beginning though. So like before I don't even think we came up. Yeah, exactly. So thanks for clarifying, Maddie. Maddie said week 2 and 3 are based off Sean's requirements. Week 1 was a raw back test when we were trying to figure out the requirements for the SR rejections. So a lot of the data here on the first week, we didn't really have requirements. Like we didn't have the trend requirement. We were just taking every single rejection. And that's why this one right here was identified as a loss. So I think that's where the confusion is. Sam, if you look at the most recent ones though, because I think, yeah, it wasn't last week, but it was the week before that. That's when we had a mentoring session and we covered the requirements. So we didn't have any requirements back then. We were kind of just we weren't looking at no trend meter and we weren't looking at pivots. We were kind of just looking for momentum and, rejection. So that's where that loss came up. But now that we have the requirements and we were like, okay, it's bullish, then obviously we wouldn't have taken this trade here because it would have went totally against all the requirements that we have now. So yeah, sorry for the confusion, guys. But thanks, Maddie, and thanks, Sam, for actually bringing that up, because now when someone else asks, we have an idea. I'm glad Maddie's here too, because I would have been totally lost. But yeah, for the most part, I would probably just avoid week 1. because we did kind of play around with it a lot. That's why Maddie has so many entries off. There's like 72 trades, right? Because we were doing we were literally taking every single entry. So it does work very well, but we want quality over quantity. So I'd rather take like 10 trades and have them all win rather than have like 70 trades and have 5 losses. So yeah, thanks for clearing that. And you can see the big difference because for August week 1, there was like 70 trades. August week 2, there's only 8 trades. And then last week there was only 14 trades. So huge difference between the data from week 1, week 2, and week 3. Maddie says in class doing some work right now, but it's boring. Yeah, I know, I bet, Maddie. So yeah, guys, if there's anything else you guys want me to cover, if there's any other confusion, just let me know. If there's any other examples you guys want to see, let me know as well. I'm here to help you guys out. So whatever you guys need me to clarify, clear up, review, just go ahead and drop your questions in the chat. Sam said, I did notice most of them were rejections off the red pivot out, so I was confused. Yeah, I know. Yeah, during that week, we were kind of testing a lot of things. Initially, we were going to look at pivot rejections, like instead of the SRs. But from my testing, I mean, there's entries here where it does play out. Like you can find something like this, right? So there's no zone here, but the trend is bullish. We have green momentum there. It's rejecting off. So it does work sometimes. I know this is how CSUK trades a lot. So if you guys will see CSUK's profits, he's taking like a lot of trades, taking like 20, 30 trades because he's taking every basically wick rejection off it. And he's manually entering and exiting. So this does work too, but it also doesn't work. Like for example, right here, this would have been a loss, I think. So instead of taking something like this, you want to look for something higher quality. So yeah, if you're like nano scalping and stuff and getting in and out super quick, it could work for you. But for me personally, I'd rather not stress myself out trading like that. So, I mean, there's a ton of ways to apply the strategies here. It just depends on your type of trading style. For me, I'd rather take 2-3 trades, have them all win, and call it a day, rather than sitting on my screen all day taking like 10 trades, 20 trades a day. Of course, you make more profit, but it's not going to be good for your health if you're doing that every single day. You're gonna be pretty stressed out every morning. But yeah, so if there's any other questions, guys, feel free to put your questions in the chat. I'm here to help you guys out. Really, I want you all to succeed. Like everyone here is killing it. So that's the good thing. The bad thing is if you're not doing well and you need help, but you don't ask for help, we can't really help you. So if you guys have any questions, if there's anything that you want me to cover, anything that you're confused with, any strategies you want me to touch on, what I do recommend is to just pretty much stay away from the other strategies until summer's over. It is August 22nd right now, so we're like, I don't know, a couple of weeks into September. So we're probably going to see the market slow down a bit, or I mean, pick up a little bit in the next couple of weeks. And then towards the end of September, that's where we'll really start to see it pick up a lot more. So, just be patient. It's gonna get better over the next couple of weeks. I know today was kind of like a trash trading day. It was like nothing going on. I couldn't take anything. But I'm glad to see a lot of you guys here. We're still taking trades off my analysis. Just looking at the profits from today, you guys did pretty good. Like Emilzon over here, he texted me earlier today. He waited like literally all day for like that one entry. Where is this hard chat at? I was just talking to him. Oh, there we go. Yeah, so he was pretty much waiting like literally all day. He just had patience, like at 10 a.m., right? He was waiting. He finally got that entry right there. Let me see if I can find that. But eventually, he took it and then it hit. So it's all about patience. He took that trade around 10-ish. Oh, it's the same one that we went over. The same example that we looked at earlier today. So he waited for that rejection right here. And you took that same exact trade that we used the example for earlier around here, that one. So we took that sell, hit his full TP, and called it a day. So pretty solid. See who else. I think other people did pretty good too. Yeah, Millzone locked in about like 500 per account, 500 off his second account, 500 off his first account. Seth over here did pretty good as well. He locked in like 31,000. He was taking a bunch of trades throughout the live session. Sisuk as well. He was up 11,000 for the day. Scotty up 1,100. So as you guys can see, there's not just like a few people here profiting. There's like a pretty good handful. So if you guys are not at this level, it's completely fine. But if you guys want to get to that level, you guys have to like really put in the work to understand like what we're doing here. Because if we're doing this every single day, there should be no excuse for you guys not to be profiting as well. Unless you guys are doing your own thing, which is completely fine. You guys can do whatever you guys feel like. But if you guys apply, what's being covered pretty much every day, you guys should have no problem. This is just from today. You can see the timestamp where it says today right here. David made profit, Charles made profit, Patricia made profit, and I didn't even take any trades myself. These were just trades off my live analysis. Scotty again right there, Kenny. I mean, it's a pretty solid day. Seth, Al, pretty good overall. So, all right, guys. I mean, we've only been on this session for like about 40 minutes, but I don't see any other questions. If there's any other questions, guys, don't feel shy. Just put whatever question you want in the chat, and then I can help you guys out. Otherwise, if we don't have anything, we'll pretty much have to wrap this up early. This is probably one of the shortest mentoring sessions we've had. Typically, we go on for like 2-3 hours, but it's all right. I guess that just means that you guys are actually getting it. So. Other than that, I think that might be it, guys. So just a reminder, this Friday, we're not going to have a mentoring session. I'm going to be flying to Cabo, San Lucas, Friday morning, I believe. So it's going to be conflicting with like our live session. But it's okay because looking at the news for that day, we have, there's just a lot of stuff going on, right? Like at 5:30, we have a core PCE price index. This is pre-market movements. And then Fed Chair Powell is speaking at 7. So we're not really going to have much time to take trades anyways on Friday. We typically go live at 6:30. So we have like maybe at best, 10-15 minutes to take any trades because the market starts to move crazy before Powell even starts speaking. He speaks at 7. But the thing is, a lot of people start to hop into the market like 20 minutes before that because they want to catch those spikes when he starts to speak. So just gotta probably just chill on Friday. I mean, that'd probably be my best advice. I'm probably just gonna chill that day too. So I'm just gonna leave my laptop here. So iPhone or Stanley. Stanley, so this is Stanley. Which strategy are you using now during the lives? So the main strategy that we're applying right now during the lives is this strategy right here, Stanley, the K2SR rejection strategy. It's the one that I just covered pretty much all session. We're applying this because of the current market conditions. Like you've been part of K2 for a while and you've been trading with us, so you understand how the market changes during the seasons, right? In the summer, we go into like a ranging market. Price just kind of bounces back and forth. It's a lot of consolidation. Volatility is really low. Typically, like during normal conditions, market will move like about 1,000 to like even 5,000 pips on a good day. During the summer, it'll go down to like less than 1,000 for the entire session. So while you can still apply the other strategies, I mean, you guys can see that the strategies still work perfectly fine here. These aren't optimized for this type of market. Like typically, if you're looking at this intraday scalp right here, this does hit, like, don't get me wrong, it does work, but it just takes some time for it to hit, right? You'll be holding on to this trade for like, let's see, 1, 2, 3, 4, 5, 6, 7, about 7-10 minutes. And it takes a while for these other entries right here. For the SR, you guys can see that this hits like a lot quicker. This will hit within, maybe half that time. And there's just a lot more entries when applying this specific strategy. So Main reason for us to apply this strategy right now is because of the market conditions. Summer is ending soon though, so we'll go back to applying like pretty much all the other strategies. But you kind of just have to adjust with the market, right? You can't just keep using the same strategies when the market doesn't give you what you're looking for, especially with volatility. Like we can't take breakout. Well, I mean, we could take breakouts. The breakouts have still been working, but it's like you'll be holding on to that breakout for like an hour, and it'll probably drive you nuts because you're typically waiting for that breakout to hit within the first couple minutes or so. So that's why we don't really apply it very much. And also the daily entry. So like, let me check if there was a daily entry today. Let's take some of this stuff off. Turn this off, turn this off. I want to clean it up a little bit here. So there was a daily entry right here, but we wouldn't have taken it because it goes against the bias, because we had the trend was like very strong for a sell. Obviously you wouldn't want to take a buy there, but let me just map it to see how far it actually took it. So I don't even think it actually finished, or maybe it did. So it took like, typically the daily would hit like right away, or at least within a couple hours or so. This went on for like maybe 3 or 4 hours. Yeah, about 3 hours before it came down. So the movement's just a lot slower. But we wouldn't have taken this here to begin with. We would have taken a sell actually. I know you haven't been around, Stanley, but like there's ways to apply these strategies here where you could take the opposite. Like we do have a buy here for the daily, but you would take a sell. Like you just take the opposite trade, because just analyzing it, you're like, okay, if you took a buy here, this would probably lose because it's in such a strong downtrend. So instead of taking a buy there, you would just do the opposite because you're already anticipating the loss. And then you take the sell and then you just win off that. So that's the main reason. But I mean, if there's any other confusion or if you don't understand like what I just explained, Stanley, just let me know and I can try to break it down for you. But I think you understand because you've traded with us for a while, so you understand. I know that you for sure have seen it because you do really well in the beginning of the year. Like it was crazy. I remember when you first, not when you first started trading with us, but I know you took a break during like the winter when you had your baby, and then you came back and you did really good for like the first couple months, and then it just fell apart because it became summer. And I don't think you realized that, like, we were going through the summer and then the market conditions were changing, so you had to kind of change the way you were trading slightly, and you kept trading the same way. But a lot of you guys will start to notice that, like, the more and more that you guys trade like all year round, you'll see that you'll probably do really good from like November up until May. And then summer comes around in June and you start to lose every trade. You're like, what the heck's going on? It's because the market changes. And then people usually do bad from like, not necessarily in K2, but in general, people do bad from like June up until September. And then, a couple accounts blown here and there. They come back in like September and they just make it all back. So you could either not trade during summer, or you can just use the strategies that we use during the summer. But either way, you should be able to make adjustments using the strategies that we have. Yeah, no, definitely. Stanley said couple summers and I see it clearly now. Yeah, no, it starts to make more sense. I'm glad you never gave up, Stanley. I know you come and go every once in a while, but I'm glad to see that you're still here pushing, because you just gotta basically crack the code, which is what we're doing here every day. Yeah, no problem, Mauricio. Let's see. Professor said he took the breakout this morning in demo. Took a while, but it hit CP. Yeah, no, exactly. It takes a lot longer, and you definitely don't want to be holding on to a trade for that long, because it can easily just reverse on you at the last second. So that's why I haven't been applying it at all. Maddie's asking, do you think we'll be able to still take the SR during the winter? Yeah, I think so, Maddie. I would go and back test it, but we can't go that far in back test. Obviously, it sucks, but I think the farthest we could go on the 1 minute would be like a month back. So there's no way we can test it. But I'm sure it does work. Other than that, let's see. Yeah, Stanley said those breakouts when I first started were some wild days. Yeah, I know that stuff would make you go, like, it would stress you out because it would go so close to your stop loss. And then I'd see a lot of people just pull out because they're just like, oh, this trade's going to lose. And as soon as you pull out for a loss, it shoots right to your TP. So it was pretty crazy, especially like pre-summer where the volatility was super high. We'll be back to that shortly. September's just around the corner. So, all right, guys, I think that might be it. There's no other questions here. If there's any other questions, feel free to drop them in the chat right now. Otherwise, we'll be wrapping this up. We'll be back here tomorrow morning for the next live session, and we'll continue on with this trading week. I think this week's going to be pretty crazy, guys. Like, just keep in mind, there's a lot of news. Like tomorrow, a lot of news. Flash PMI services at 6:45. We're going to go live at 6:30. 15 minutes in, we got some crazy news coming around, high impact. So this will set the tone for the market. It'll probably spike price, some manipulation, and then it'll set it up for some more solid entries. And we have news again right after. So we got two news events like pretty much back to back. 6:45 right after we get on the live, and then again at 7. Wednesday, same thing, pre-market news at 7, and then news at 7:30. So this doesn't necessarily mean it's a bad thing. It just means that the market's gonna be pretty volatile, so you gotta be a bit careful. And you can get greedy. You gotta be able to pull out of your trades, even if your TP doesn't get hit, because you're probably gonna get hit with some slippage, or the spread's gonna be super wide during those times. Question from iPhone, or from Stanley. Stanley's asking, when do you suggest for my game plan this week, since I've been home, since he's been gone for a while, start a challenge? I think game plan for you, Stanley, would just to follow us on the lives, right? You got to get into the swing of things first. Like, you don't want to jump in too quickly and then make mistakes. You probably just want to follow the lives, whatever trades we're taking. What I'd recommend is go back and rewatch this mentoring session where we went over the strategy, like step by step, and just really understand how it's applied. Go ahead and back test it and practice it as much as you like, and then follow what we're doing on the lives. I think you just need to have a couple wins under your belt to get that confidence back. And then once you have that confidence, you can start hitting the ground running. There's gonna be a lot of entries, you'll see. So I think you'll probably see it tomorrow. The thing with this strategy is that when one entry comes up, it's usually followed, they're like in bunches. They come like 2, 3 right after. So if you remember, or you weren't here last week, but so my trades from last week, they come in bunches. Like, for example, right here, right? Like, I took one trade right here at 6:47, and then there was 2 that came up like right after it at 6:54 and 6:55. Like, I didn't have time to think. I just literally took them right after each other. And then they hit their TPs. I think the day before that, I even had more profits. Yeah, like right here. So I took these trades. I can't remember when I took these trades. I took these trades at 8:14. So this was after the live. I typically don't trade at this time, but the inches were just too good. So you can see I took this one at 8:14, 8:16, 8:19. They're like a couple minutes apart. So you just want to be ready for them, because if you miss them, you miss them. Just wait for the next one. There's going to be another one coming. So you just want to make sure that you have requirements down and you know what to look for. Yeah, exactly. Maddie said, can't think too much when the entries come up. If they fit the requirements, just take it and send forget. And I agree. Exactly. PC is asking, when trades come in bunches, do you wait for the first one to hit TP, or is it okay to have 2 running at the same time? So I think this is it's specific to the person trading. So like for me personally, like if I see a really good setup and I know it's coming back to back, I'll take them at the same time, because I know that they're going to hit. Like you can see that these kind of overlap, right? Like this one was probably still running when this one came up, where like this one hit TP, and then right after this one came up, like, because when this candle closes, you're going to have another entry coming. You're probably off by like, a few seconds. So for me, if the setup looks really good, I'll take them at the same time. If it's not, I'll just take it one by one. So I mean, it just really depends on like how the market's moving. If it's moving smooth and it looks like it's going to hit, then I wouldn't be stacking them. Like for this day, I was just on a roll. I typically don't do this, but I was on a roll. I just kept taking them. Like this was a crazy trade, because if you guys were on the live, you guys remember that I accidentally, like I was trying to adjust my lot size. It went from 10 to 15. And then when I tried to delete this and put 10, it went to 25. And then these trades came too fast, so I just kept stacking them on, and they all hit TP right after each other. So thankfully this worked out for me. If it didn't, I could have blown my account. So I don't normally do this, but the setups were just too good to pass up. So that's why I took them. Yeah, Maddie said I would not be in 2 running trades personally. Yeah, so it just depends on the person, right? You know, if you feel comfortable with it, then do it. But I would probably recommend you don't. Because if you were comfortable, you wouldn't be asking the question, right? So like, just to be safe, I would just wait for one to close out and then take the other one. You're probably you're gonna miss like an entry after the other one, but it's better to be safe than sorry. But eventually you'll get better at it. Like once you once you get in the groove of things and you just start to take trades and not really think about it, you'll know that that's when you can take those types of trades. But I don't recommend it unless you're like really, really confident with the entry. So, all right, I think that's it. I don't see any other questions here. So I think that's it, guys. We've been on this session for about an hour now. So I think all the questions were answered. If your question didn't get answered, you know, feel free to drop in the chat right now. Otherwise, we'll be back here tomorrow morning for the next live session, and we'll have another mentoring session next week. So it's okay if you guys, if your questions didn't get answered, guys. If you guys have any question, always feel free to send it over to me or write it down so that when we have the next mentoring session, you don't forget. But other than that, I will see you guys tomorrow morning. So if you guys have anything else, go ahead and feel free to email me or message me on Telegram. Still got a ton of work to do. Hopefully you guys are getting acquainted with the transition. The website, you know, I'm going to try to transition the website so we don't have to have any like downtime. I've had literally all this stuff photoshopped. I got like the photo back here with like the sign. It now says Kodi Kai Trades. I got this change right here, this little laptop thing. This now has been changed as well. I just need to update the website and stuff. But I think everything's going to look pretty much the same. It's just going to have a different logo. And all the K2 stuff is pretty much going to be removed. So other than that, guys, I will see you guys tomorrow morning. Have a great rest of your day, and I will catch you guys on Market Open. So catch you guys.